hear you. And I
Okay,
see Albert.
perfect. And you see Albert? Good old Albert's up there?
He's looking happy.
Okay, very good. All right, everybody. Once again, thanks for attending. We know you all have very busy days, so Steve and I are always honored that you pop in to hear what we have to say. So it's a fresh week. I hope everyone had a nice, relaxing weekend and is ready to get back to business. So before we get started here, the old lawyer speak. Need to get that out of the way. Just want to make sure that everybody is aware that we here at Trade Ideas are publishers of information. So we just want to make sure that everybody is aware of the fact that we're not giving you investment advice today. So everything we share with you is strictly for educational purposes. If you do need the services of a registered investment advisor or a broker, I'm sure you know the places to go to find that type of service, but everything we share with you here today is strictly educational. All right, so before we get into Steve's analysis of the overall market and where we're headed, everybody that was paying attention obviously today knows we kind of finished at highs. So here we have a shot of the guys on the exchange clapping, yay! Market pushing higher, getting closer to those all-time highs, and these guys are happy, this guy's happy, but what's going on with this guy back here? He looks like he looks like he's short and about to get squeezed out, and he's wondering how he's going to explain it to, I'm sorry, the kids were going to be able to go to college, but I made the wrong bet, right?
It's either that or he's realizing a computer's about ready to take his job.
That could very well be it, too. But, just trying to throw a little bit of humor in here, ladies and gentlemen, obviously this guy wasn't using Trade Ideas.
No.
So, let's do this. Before we get into our topics of discussion, let's just let Steve talk about this nice action on the SPY. And, Steve, you don't really get into the prediction business because that's not really the best business to be in, right? But, Thursday, I believe, after we had or during our webinar, you're like, yeah, I don't usually like to make these calls, but, you were like, I definitely think there's an upward bias here.
Yeah, I don't want to make predictions, but I'm happy to make bias statements. And, the bias is still up. Look at that Friday action there. We had the jobs reports come down, probably the worst jobs reports in 5 years, as I understand it. Unless you think we can recover our economy on part-time service sector jobs, then it was a great report. But if you believe and you're in the camp that that's not going to cut it, that was a horrible report. But like we've had over and over, year after year, bad news seems to be good news because the market anticipates more junk, more heroin, more sugar candy from the Fed and the central banks around the world. But all we can do is look at the footprints in the sand and determine that, the crowd did not fall for the banana in the tailpipe of the bad jobs numbers. And this has just been par for the course. What's been happening? What's weak in the morning seems to get bought back in the afternoon. So there's a strong closing mentality in the markets. And again on Friday after we had that catalyst of jobs reports. Lo and behold, we come into here Monday, a bit of a gap up and a trade up, and we basically traded right to the tip of that November 2015 high. Scroll back just a little bit. Yeah, I mean, literally within, it was a 10-cent plus or minus right there. So when you're looking at charts, you always got to be looking left first and seeing from where have we come and where could we be going. Well, there's really, it's not surprising that we had some resistance pop in today right as we hit these levels. Going back on the charts, just drawing simple horizontal lines. There was supply back then at that point in time, and there was supply then again here today at this point in time. But what the bulls have in their camp, in their favor, is that, coming into today, we had a little bit of chopping back and forth in the higher end of this range, and a lot of energy was built back up and continued to spill through today. But because of the bias that I've been talking about, because of the footprints in the sand, the way that bad days seem to be covered up by good closes, my bias is still upward. I really feel like this market is just hell-bent on testing what can happen if we can get back above these two lines. Now, there are two lines there. The first one that we hit today is corresponding back to that November high, as we said. But just above it, in that margin, there is, more like the all-time highs. And that is probably something that this price action wants to shoot for and see if it can test all-time highs. Markets like to do that. They're like that. They like to test. They like to push, prod, poke, and test. And that's my bias. I'm sticking to it. Barring, of course, any black swan that comes out of left field and takes this market down. The algorithms are programmed to buy the bad news because the Fed seems to have our back, world bankers seem to have our back until that stops working. So, again, not getting caught up in the fundamentals and the speak, but the footprints in the sand tell me that the crowd wants to take this higher. That's my bias. I'm not making that a prediction, but it's my heavily personal bias.
Absolutely. Absolutely. And of course, we all are in the reaction business, not necessarily the prediction business. And this all kind of folds back around to what we're going to be discussing today. You know, uptrend continuation after the doji close on Friday. And then getting back to our, what we like to call our compulsory routines, which are doing the same thing every day, but there's a methodology to it. What we affectionately refer to here at Trade Ideas as the Holly Trinity, right? And just to refresh everybody's memory on that process, and for those of you who are new out there and may have never heard of this before, it's a pretty simple three-step process. Number one, we have to have a source of information which manifests itself either in the AI Holly window, or maybe a different top list that we're using for the day, or an alert window. You know, that's where we find the action. And then what we do is we look at the footprints in the sand, which are the charts, and then we use the tools within Trade Ideas like the limit price alerts to make sure we don't miss out on that action. So we're going to be, you know, covering that process in detail today. Let's do this. We're going to do the Holly performance and trade evaluation today, the activity that she put on, and then talk about a couple of trade arounds that were present in there today, and go into detail about what exactly the trade around is. So let me just shrink this daily back up, and we'll just make the intraday a little bit larger. And so here is the trade panel that Holly produced for today's action. As we can see, only long strategies in here today. And of course, all of these calculations were ran after the close on Friday. And just to recap where these strategies come from is that Holly's got a bank of 45 or so base strategies, which she analyzes every night after we fold in today's market data. And what happens is she backtests all of those strategies, and these strategies have huge trade counts. Some might have 3,000. Others might have 30,000. But the bottom line is Holly gets in there, rolls her sleeves up, starts backtesting, making changes, doing her optimization, and only the strategies that score high enough on our proprietary scoring system get to make the final team or the starting team the next day, which out of the whole group, it was only these 5 longs for today's session. So if we look at the trade count here, just because a strategy shows up like Beacon and come back to me, we can see if we look at the trades today column, they did not produce any trades. So this guy here had 1. We had 2 from, well, these are the same guys, under 20 and over 20. So 3 trades respectively out of those 2 strategies. And then this little guy right here spit out 5 today. So now let's take a look at all of those trades in their entirety and the winners and the losers. What's that, Steve?
Just not that many. I mean, this is one of the first days I've seen so few strategies and all of them long to the long side, and then it just kind of wound up with very, very few trades for the whole day. I guess my comment was on the bell curve of things, this was really on the light side today.
Absolutely. And of course, you know, when we're starting to get these small range bars up here, you know, as the SPY kind of tightens up, we could have more of these days. But the bottom line is this: between Holly and a couple of other of our staple windows that we're going to be showcasing today, plenty of opportunity without too much overload of information, which is the way we always like to try to keep it.
Yep.
Simple, simple, simple. Here are my high value information sources. All I have to do is be very methodical, and I already know what's coming through these windows because I'm used to them. So all I have to do is look at the chart and go yes or no. Now on a day like today, I might do that 20 times and maybe pick 4 or 5 trades if everything looks good. On a more active day, it's just a lot more of the same process. But today was just a nice. If you can call a trading day relaxing, then today would have qualified for that.
Here's one of the reasons it probably felt a little bit more relaxing than usual. I'm noticing something very unusual, and that is the exit reason today. Everything was a timed stop except for one.
Yep.
So there really was never any volatile, emotional drawdowns. For the most part, it was just, no, except for that one stop, very modest 25 cent. But for the most part, these trades were able to stay intact for the entire duration of their time stop, and the only reason for exiting, of course, is the time stop. And I'll just take that moment to try and re-simplify and rehash the 3 ways Holly exits a trade. One is a profit objective target achieved, which is great. Everybody wins, everybody's happy. The next is a stop is hit, and we always want to really pay close attention to those and adhere along with Holly as she's demonstrating, meticulous, well thought out risk management. No big winners, big losers. You will never see big losers on Holly. That's a recipe for disaster. But then, of course, the third exit reason is a time stop. At some point in the day, she does have to get out. And this is where it creates some interesting trade around opportunities. And the most simplest of all is you got to ask yourself, on the trades that are up, and Holly's going to close it out, do you want to do the same thing with her? And if you're in a stock, for instance, that first double-click VSAT, it just didn't do a whole lot all day, but it never really went negative either. So again, Trade Ideas is designed to serve up interesting, statistically probable ideas, but it's up to you, the trader, to determine how you want to manage it. Not conversely, but in addition to that, let's look at dry ships. Dry ships was, again, Holly has been, in my opinion, doing after hours is not working, huh? Is that after hours?
This is after hours here.
Okay, so dry ships had some bad news after hours. So
that's what it appears, yes.
That's what it appears. But for the most part, during the day, I've noticed that the under $5 stocks with Holly seem to be doing pretty decent, especially when you consider the profit percent. So that very last column, you get a 3% move on dry ships today. But since we've added that profit percent column, I've noticed that some of the stocks under $5, we've had some decent moves, 11, 12, 13% in some single days. But somebody asked me today, what are you watching when you watch Holly? I'm paying attention to a couple things. I'm paying attention to the overall strategy win percentage when it comes in for the day. I like to give the strategies, they're at the higher end of the win percentage bell curve, usually up around 70%. I like to give those maybe a little bit more credibility than the ones that barely made the cut down there at 59%. And I also have been paying special attention to the under $5 stocks because that profit percentage category has really opened my eyes to how much alpha really is lying in some of these smaller cap stocks. And of course, when you're trading these smaller price stocks, you can throw in some more shares. And so when you get a decent percentage move on some decent share size, that can start to add up. Not a whole lot of trade arounds today, but again, just to hammer home, just because Holly is getting out on a time stop and the trade is positive doesn't always mean you need to. Conversely, when Holly is getting out of a negative trade on a stop loss, probably a pretty good idea to follow and get out and press change, rearrange, not allow big losses to be taken.
This is true. And so, just pulling the VSAT chart back up one more time, Holly's entry was right here. So, just the point being is that if you were in this trade, you're in the money with this little consolidation or NR7 intraday pattern forming. Holly's going to get out, at her designated time because that's what she's programmed to do. So 8:25 would have been her exit time. So right about here, you don't have to be a highly advanced trader to go, you know what, I know Holly's getting out, but there's no reason for me to get out. The trade's, in essence, working, so I might as well adjust my stop. And had you stayed in that trade today, whoosh, you would have got a nice little surprise toward the end of the day there. And, at one point, this non-exit column's up over $1 and change. Now at the close, 91 cents. So the way we like to look at this is, after everything was said and done, Holly, uh, operating with statistical efficiency, just bailing out of her trades at the designated hold times, was still up 34 cents. But we can see just in the VSAT trade alone, there was an extra 60 some odd cents in hidden alpha just by staying in the trade, which we can't see anywhere on these screens except in this non-exit profit column right here.
And just to add, we're going to be constantly updating and trying to improve all the features in Trade Ideas, and that, of course, includes Holly and how we can always improve, give her better odds. And one of the things that's being worked on in the test servers right now, this will come to light probably in a few weeks, maybe longer. I don't know how long it's going to take to work on this, but we're trying to have Holly's risk management be a bit more efficient. And what we don't want to see are stocks that have nice big alpha gains only to roll over and go negative. So we're implementing some, sort of smart algorithmic trailing type stop, and we've been testing that on the test server. So just kind of whetting your appetite and giving you a little teaser that we will be talking more about that in the future to see how it compares to the current risk management laws that we have in place. So just a little bit of a down the road teaser.
Yeah, that is very exciting, Steve, because it's something that we've been wanting to add for a very long time, but we didn't just want to jump in there and add something generic like trailing stops, right? That's been a big topic of discussion. We're trying to do it a little bit better than that, go more of the scientific route. So what we're putting together is basically a stop that has time decay associated to it. So the longer the trade is in play, the tighter the stop will get over time. And so it's on the test servers right now. Maybe after this week, it'll be ready on the beta. We don't have any ETAs yet, but hopefully sooner than later on that deal. Okay, so Steve, as you said, pretty light day for Holly, pretty light day on the trade arounds, other than the VSAT, just not a whole lot of other things to point out. However, I do have to say this, is that, when you do see Holly, today's the perfect example, and we're looking at these, patterns, you see Holly get long here on RPAI, right? And of course, this one doesn't move a whole lot, but it's the pattern that we're fixated on. If you see Holly get stopped out of a trade, well then that should be something that you take a look at, because what we like to talk about all the time is statistical entries and then the good friend that comes along with them called timing. Now this also applies on the exit to the trade as well, but we all know Holly is just going to do the methodical thing every time based on what her hold time is centered around. But, there's plenty of times where you see Holly get long and it's going red and you're like, ooh, well, let me pull this up and see what's happening here, because once you see her get stopped out and then you look at maybe the daily or some other indicator and you're like, well, it really seems like a good time to get long now. Or if the chart is conducive, maybe it's a good time to get short. So, there is value in the trades where Holly's losing money too, because it's a statistically weighted trade, but the timing might be a little off. So, Holly is that trader that even if the market's not conducive, if the waves are choppy, she's still going to just jump headlong in there, and you can learn by watching her.
Yes, sir.
Alrighty. All right. Well, Holly, nice performance today. Thank you very much. Now we're going to move right along to our good friend,
Alpha
Predator. Now, some of you, I would take it, since the majority of you in this webinar are already subscribers, I would take it that you've been watching this window, hopefully, and you already know then that it used to be called Top Predator, but we thought Alpha Predator was a little bit more appropriate of a name, and Dan Merkin, our CEO, is the guy that came up with this window in the first place. And along with the name change, he added a few tweaks to it. So it's been spitting out some very, very interesting plays. All right. So what we're going to do is take a look at the list that we see right here, which pay attention to the time slice right here. This is about 5 minutes. This is the first 5 minutes of the open, right? So 6:30 to 6:34:59 here on the West Coast, where we get up bright and early to interact with the markets. So what I've done here is I've sorted this list by the StockTwits relative activity. And if we're going to go through here and take a look, and what we're going to notice is that, because Steve and I were talking about this, it's a top list. But there are different ways that we can sort the top list. In other words, how do we best optimize the display of the top list? And so what I've done here is I've said, okay, on the StockTwits relative activity, once it gets over, 2,000 or so, I'd like it to be colored in yellow because mainly it's these that are going to have the interesting results. So let's do this. Let's start down here with CNHI. And keep in mind that this is a long biased ticker. So if we pull up CNHI right here on the good old intraday 5-minute chart, well, we can see what happened right off of the open. Whether you bought it here, whether you bought it here, or just anywhere up there, I mean, it was a very good entry. Obviously, the sooner the better here. Now, that StockTwits relative activity right there, keeping in mind that this is the first 5 minutes of the open, and if we divide by 100 to get the X factor here, already in the first 5 minutes, CNHI was being talked about over 21 times normal in the StockTwits universe in the first 5 minutes. Look what it did, straight up. Now we pull up the next stock right here, PWE, which, one little red bar here, but the overall gravitational weightlessness here is the same. So basically what's happening here is based on this column right here, as long as it's anywhere from 0 or 94 up into this 2,000 range, once it gets over 20, if we look at these guys, they seem to have kind of taken the other direction. This guy threw out some wide range bars, gave people some nice heart attacks that were short before he capitulated, right? But if we start looking at the 2000s, CNHI, PWE, FRO, UEC, BMY, ACAD. So we're seeing the same thing here. Veil, this one, didn't really go up or down, just kind of did its little sideways dance here. But the bottom line is, a lot of these guys that fall into these parameters over here, just straight up off the open, And even if you were taking whatever the same share amount or the same dollar amount on all these trades today, with these guys that just made these nice little percentage runs on the open, you probably did pretty well if you were just blindly taking all of them and applying some stop loss, and risk management to this little group of stocks, right? But this little guy's been putting out these same type of plays for, I don't know how many weeks or months it's been now, Steve, but it's definitely something that you guys want to pay attention to. And for those of you who do not have it, we'll gladly drop it into the chat area before the webinar is out.
I actually just did that. I put a copy in the questions and a copy in the chat. But yeah, what Jamie's saying is in here, this is a very interesting alert to be looking at first thing after the bell is open. There could be some all-day runners in here, as we've seen.
Right, and of course, exercising, prudent risk management because, hey, we all know the nature of the open, right? If you know what you're doing and you're really disciplined, there's some good money to be had trading right off the open. But if you're not prepared and, you don't have a firm foothold and really know, what your goal is and stick to your rules on the open, well, then it's easy to get steamrolled. But half the battle is knowing, okay, based on the performance of this window in the past, things seem to move pretty well off of the open. So if I can get in there and use the bottom of the opening 5-minute candle as my exit and feel comfortable about that, well, then that's the way to approach it.
Interesting. Thank you.
Well, we could talk more about the open, Steve. I mean, it's either windfall or you get flattened, right? Mm-hmm. It's just like the analogy I make every time is like it's Hoover Dam, right? On the open, they open the floodgates.
Mm-hmm. Fire hose.
Then the water gets less and less. So yeah, there's a lot of money in the floodgates, but it's easy to get washed down to the bottom too if you
Yeah.
don't really know how to navigate that time frame. So, if you do trade the open, pay attention to this window. If you're one of these people that says, you know what, I don't trade the first 15 or 30 minutes, most excellent, because this window is not just used for the open. I was just trying to point out, hey, most of these stocks did rip straight up off the open, but we can always, since a top list is always changing based on the filter criteria that we see right here, this thing's spitting out all types of different stocks all throughout the day. So if we just kind of pop back over and go, okay, not interested in the opening 5 minutes, what was going on 30 minutes into the open, and of course we can always easily retool it and go, okay, well, this is what was going on after the first 30 minutes. Do I notice any correlations here, right? So whatever time frame you like to abide by, you can always apply this window to that time frame.
Yes, somebody's asking me about the link to the Predator window. It's in the chat window. It's in there. You just need to highlight, copy, and then you basically load to cloud, and that's the same as paste, load from cloud, excuse me. So, just find your way to the chat window there, Nelson, and copy that link, and then load from cloud. Any way to freeze the alpha predator so the signals don't disappear after 5 minutes?
See this little guy right here?
Uh-huh.
Freeze. Yeah, anytime you want to freeze a window, you just right-click. Let's say this window is on real time, right? Okay, now we're seeing what the window looks like at the close, but in the middle of the market, here's what I would recommend. Let's say you're watching this window. You want it to freeze so you don't miss anything, but you probably don't want to just freeze it because then you'll miss out on any changes that occur. So here's the workaround for that. You want to freeze this window? Fine. Right-click it, duplicate it. You make a clone. Keep this one on real time. Come in here and freeze this one. That way, you're not going to miss out on anything that pops up in the interim.
Somebody had another question, and I was actually kind of thinking the same thing, and I don't know if we'll know the answer. Why were the lowered stock twit mentions a better setup? You'd think it would be the opposite. And I don't know if I have the answer. Maybe it could just be theories.
That's a good question. That's a good question.
The theory the volatility could just be so high with the higher mentioned ones that everybody's watching it. It could just be more noisy. I don't know. I'm guessing. I'm spitballing on this answer. I really don't know. It is interesting to look back and see that, David. You're correct. It's an interesting observation.
Right. And what's the real answer? Nobody knows. All we can do is line the information up, and see, that's the beauty of the top list. Let me go back to the opening 5 minutes here again. All right, so we're going to go back to the open again. And so the question was, why?
6:30. You need 6:30.
Yeah, what's wrong? My brain's a little mixed up after today, Steve. Let's see, 6:30. Yeah. Okay. So why did the values? It's mainly in here. This was kind of even an outlier, but this was the maximum one that did well. And you know what? This kind of ties into. You could apply this to any other filter. Like for example, for me. I like to watch the 1 minute volume for stocks that are hitting highs and lows, and I like to be 3 times the minimum 1 minute volume. So just like this, at first my theory that I developed was, well, yeah, the higher the better, right? Well, once you start getting above 10 times normal, things start kind of losing focus. It's like it's kind of a coin flip. Well, this one that was doing really high went up. This one that was doing really high went down. Now, I didn't come into here with any preconceived notions. I'm just like, okay, well, can I assess any correlations? Now, I chose to pick the stock twits relative activity, right? Because I happen to like the filter. I also happen to like the alert that we have for stock twits activity. We've got both filter and alert format. So why is it that the ones with these values seem to work better? Unknown. All we know is that we've divulged that information here, and that's just what it happens to be, right? So we're stumbling onto this information from an exploratory viewpoint. I'm like, okay, let's sort by stock twits relative activity and see if there's any correlations. And the correlation that I found for today was that the ones, this was the only one over 20 that did any good right off the open. These guys tended to take the opposite direction. And then anything on down to the 94th percentile, like, for example, this one, probably not real attractive to a lot of people unless you're some guy trading 100,000 shares trying to make a couple of pennies or 10,000 shares. But it seems like the ones doing at least normal or slightly above normal. See, here when we look at the ACAD, it was only 7% above normal after the first 5 minutes. This one was almost normal, pushing 4 here, and so forth and so on. So I can't tell you why it happens like that, but that's what the window is showing us, right? And that's the whole thing about trade ideas, is that we give you all these ways to rearrange the data, and then you can find correlations by resorting a list. In this case, it's a little bit easier because the list doesn't have a whole lot of stocks on it. But when you start piling in top lists with 300, 400, 500 results on them, then this methodology becomes a lot more eye-opening. So, what I would say is experiment around with adding columns and see if you notice any correlations, because that's what we do. We see something over and over again, and we're like, hey, I've seen this enough times now to where it repeats itself, so for me it's a good metric, right?
What if we change the time to 7:30? Somebody is asking, and it probably does beg the question. What do we find at a different time of the day, an hour after the open? This would be 10:30 Eastern time. Of course, we're using our local time, guys, so don't get confused.
Right. So let's just let's take a look here. So I see a lot of almost all different stocks here than what we were seeing right on the open, right?
Yeah.
So an hour in. Let's see here. That's an ET. No. Okay. So an hour in, we're looking right here. So an hour in on ERF. Of course, you're going to miss out on the big run, but it sets up again right here to go higher. Takes a little breather as the sellers and buyers become equal for a very small amount of time. And then, of course, that's also very NR7-ish looking, which is a pattern that I like to scout during the day because it looks for these little micro consolidations. And then, of course, when this little guy takes a pop higher, breaks out of that range, high here, low here, pops this range again, probably with a lot of volume, and continues higher. So, probably not attractive, hey, this guy looks familiar, so these windows are always going, or this particular window is always going to show you things that are moving. It's just, once again, it boils down to the timing, and a lot of the times these stocks that run up take little breathers and then they set up again. So once again, maybe we notice some correlations here, maybe we don't.
Yeah, it seems to me like that first 10 minutes in the market seems to have the ones that have a bit more run. I think the later we get in the day, some of that run might be exhausted, and it's more of a possible early, a late look. As an example would be like, the red bar ignored or the green bar ignored. I'd rather take a red bar ignored in the first hour and a half than than an hour into the close, so to speak. Yeah. So timing, and you guys have seen this go back and forth, one of the biggest things we can do, and essentially that's kind of what we're doing here. We've done optimizations on the back test, and one of the best, most cleanest observations on the back test is changing and tweaking the time of day in which these particular strategies work. And so we're kind of doing the same thing here without using the back test, because you can't backtest a top list. We don't have price stamps and time stamps in real time, but what we can do is like kind of reverse engineer and look at some of the stuff throughout the time of the day and try and see maybe what is more inclined to run in the early hours versus the later hours.
For sure. So now, let's kind of do a full circle back around to the Holly Trinity, because obviously this is where we're getting our information from Alpha Predator. That we're looking at the footprints in the sand, all right? And then we're going to bring our friend price limit alert window into the equation. And of course, this is part of the premium TI package, of which, that gets you the AI, the backtester, and the price alert window as well. So this is where we put our information so that we can act on it, and the system identifies it only in the most timeliest fashion when that trigger is hit. So I waited until now before I clear out all of my alerts, but just want to show everybody my price alert window because this is for the past 2 weeks. All of these alerts were set by Steve and myself in the Mondays and Thursday webinars. So before I blanked it out, just want to give everybody a peek, and this probably hasn't changed a whole lot in the past 3 or 4 trading days, but on how many did we have trigger here? 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So on 14 trades triggered, holding over a 2-week period, a little over 20 points, which is certainly nothing to sneeze at.
Good feedback. Yeah, for those of you that do have the AI Premium membership, you have access to these price alerts, and if you're not using them, you're really tying one hand behind your back in terms of helping yourself develop as a better trader, getting feedback whether that P&L is profitable or is a loss after a couple of weeks of setting your alerts. So what this does is it lets Jamie and myself know that the alerts that we're setting are still resulting in some sort of movement over time, some sort of alpha. If these were negative alerts, we'd have to reassess what we were doing and go back and say, well, we can't keep beating our head against the wall expecting a different result. This tool is showing us and giving us feedback that the entries we were choosing are turning out to be negative P&L, but thankfully not in this case. Yet another session of clearing out and reloading and then seeing where these things go. You guys as traders should be doing the same thing. Not only is it a great feedback tool, but it's a great way to select trades because as we see things, and we will go through here in the remainder of our time together, we'll talk about a few alerts and why we might set an alert and why we might not. But the point is we will set those alerts, and rather than having a manic day in the market chasing your tail and blinking lights and what's everybody talking about, what should I trade, you're going to have a couple of opportunities served up to you in real time of something that you marked up and you felt was worthy of an alert. And if it was worthy of an alert, you might as well pull it up and see if it's worthy of a trade, if the market's going in the right direction, if the sector is in play, all those things. But again, there's 2 really nice features of these price alerts. 1, to serve up nice trades in real time, which is part of that Holy Trinity we talked about. And 2, giving you, the trader, a constant source of feedback and letting you know what's working, what's not. Looks like everything on here is on to the long side. A couple of shorts, but hey, not surprised, they're down towards the bottom. They're not working as well in the P&L. This market has not been kind to the shorts. So at some point, that's all going to change, and you can keep setting these long alerts and doing the same thing we've been doing, but that's where traders fall into the biggest trap, is not adapting, continuing to go down the same path even though it's no longer working, only because for whatever reason you fear change, you don't have any ideas on how to change, you don't want to change, you're unable to change. You've got to be able to change, and you've got to be able to be open-minded, and I think it's a great practice. What Jamie and myself do as well is load these things up and then clear them out and start over, because it's giving you constant feedback and constant confidence that what you're looking at is going to give you hopefully the same types of results you've been seeing. How can I save all of the symbols? Here's a question, Jamie. How can I save all of the symbols from the Alpha Predator to either the clipboard or to CSV file? Very simple. Jamie's going to show you.
Right click here, we say Save Contents. And you can, obviously it's going to save it as a CSV file automatically, but it's just as simple as that. We right click and say Save Contents.
And this can work like we talked about earlier. If you want to freeze something, this is another way to freeze it. Put it on a spreadsheet and then let it go. You'll never have to worry about it again. So just another adjunct to that earlier question about how can I freeze if I see a list of something I like and I don't want it to refresh and lose it. You can either duplicate the window and freeze the other one, or you can just grab and quickly save to spreadsheet and then monitor that spreadsheet.
All right, another little thing to point out here is notice that this window is frozen. If you ever see blue up here, that means it's frozen. Notice when I remove freeze, the blue goes away. So
see, you learn something new every day.
Right?
I did not know that.
I think I just noticed it a few days ago because I don't ever freeze windows, right? Yeah. That's probably why. I'm not much of a window freezer. I just I'm a watcher.
All right. Well, since you cleared out your price alerts, I guess it begs the next step. Let's fill a few of them in and go through a few. And then, of course, those of you that want to receive the alerts we're setting, you can either set them yourself, or we can collaborate and save these alerts that are being set into the cloud and drop that cloud link down to you as well. So,
right, and this is the perfect use of the Holly Trinity, because we're going to be focusing on this window as our information source, checking the footprints in the sand, and popping those ones we find interesting into here to complete the Trinity.
Well, let's do this. Let's really expand that daily window so we can work backwards in time. So as we go through and scan, we don't want to start scanning on a 5-minute. We want to start our scans on a daily. And right there, that tells us do not chase. But there could be an interesting pullback. I don't know.
All right, so Steve, let's talk about how we want to sort this page first.
I personally,
I think I know what you're about to tell me. I don't think that column is.
You don't have that column in there? Yeah, you've got float shares. Those are the total floats.
But we don't have the short.
We don't have the float, so a share is short. So we basically go to our search term, type in the word short. There's our short float percentage. Grab it, add filter, or skip a step and just go to show column and basically throw it right in there because we don't plan on filtering that. Let's move that over next to the short float because I like to have the short float and the total float of shares next to each other, which, by the way, was one of the reasons OUTR was chosen as a volatile stock for trade of the week this week, but I'll talk more about that on Wednesday night. OUTR had a very small float, which I believe is 11 million shares. Look at our single stock window. What does the single stock window say? 11 million float?
Let's see. We've got 70% on the short float and then 11.6 million right here.
Right, so that's the recipe for volatility, a high contingency of short sellers. And I'm going to take a moment and assume there's a few people in here that don't understand the significance of a high short float percentage. When you short a stock, you need to have that backed by a stock certificate. So therefore, there is a finite amount of shares in the circulation. In the case of OUTR, it was 11 million shares. But when you take 69% of those 11 million and you report to the SEC that they're being held in the broker's vaults by short sellers, what's going to happen if those guys are wrong? If they're wrong, they have no choice but to buy to close their losing position. And they're going to be competing with new people coming in looking to go long in the stock. So it becomes a frenzy of buying to not only create positions, but to get out of losing positions in a panic mode. And that's what we create. We call the short squeeze. So getting back to I like to align the columns here on this one is I like to sort by the ones that have the biggest short float and have those go to the top. Now it's a bonus. In this case, we do have a bonus. PSIX has an extremely tiny universe of only 4 million shares. And of those 4 million, almost half of them are short. So the smaller the float, the more movement you're going to get, the less energy it takes to bump the thing out of the way. All right, let's look at this chart here. How many days of green have they had? 1, 2, 3, 4, 5, 6 days of green candles. Now, if I was a short seller back there at the obvious levels where Jamie just drew that line, that's where you want to start shorting at levels of resistance. The price level blew through that resistance, and it's showing no sign of stopping. So in this particular case, I might look to set a pullback alert, but I don't know if this thing is going to pull back because of the tiny amount of float available and the incredible amount of that float that is being held short. This may be the beginnings. We may already be in the throngs of a short squeeze in this particular stock because looking at that, I wouldn't be happy being short, but we can still maybe try and identify a level of a pullback that might make sense, and just in case we can use our price alerts for a possible pullback, and maybe the shorts will get a good handle on it, and then they might have to reassess what their situation is. But again, there's two schools of thought on this. Sometimes these trains that are leaving the station on a short float with a very thin float to begin with, they may never pull back. But that's not what we're doing. We're not going to try and gamble on that one. We're going to just set a possible basic pullback alert. And if this thing does come back, I might even set it higher, Jamie. I might even set it maybe like $17, just a round number at 17. It looks like way back on the left side of your chart there were some wicks back there. And then again, when I do a pullback alert, I remind myself to watch the market action. This is just an eyeball. I'm just thumbnailing this thing. It's not as clear and defined as a breakout. And a lot of times in a breakout, you don't even have the time to grab the shares because the stops are ripping, the buy stops are ripping, and the frenzy goes. And so by the time you pull it up, you've missed a little bit. But on these pullback alerts, sometimes they overshoot and go through. But I like to keep an eye on it and watch it and see if they can wick back up on a 15-minute candle. And if the buyers can start to identify a new level of base, then these kinds of stocks become a bit more interesting. Now, on the flip side, if you do want to not miss out on this and you are in the school of thought that says this thing's just going to keep going based on the small float and the large float short, you basically just, all you can really do is just kind of jump in and hold your nose, but do it with smaller size and get it on the radar and watch it, and you could maybe add on some pullbacks, but you've got to have a very, very, very liberal, generous stop. You can't get into a trade like this on that daily chart and expect to have a 15, 20, 30-cent stop and not get hit. This thing has come a long way. How much more is it going to go? It likely could go. Uh-oh.
I set the limit alert and it auto executed, so I'm like, okay, what happened to the stock after the market?
Okay. Yeah, so looks like whenever you see a stock alert trigger like that, it's you want to check after hours. So this thing has obviously had news after hours. So let's go ahead and just kibosh that and move on to the next one.
Right, so just before we move on, obviously this one is already gone. This is where we like to catch them as they're breaking out. So that was beautiful when it broke, but that was just kind of overdone, and now that we know it's moving post-market, not exactly something that we want to waste a lot of energy on. Now, Steve, this little guy ZG, here we can see he just recently broke out of his little guy right here, right?
Yeah. Oh, yeah. That's interesting, and that's a very, that's good. That is a decent one because we tested it once, kind of came back midway, pulled back again, built a higher low, came back. In other words, we're not getting to that level of resistance on just 2 or 3 days of up green candles. We're doing it slowly, 2 steps forward, 1 step back, and then we just kind of peeked our head above that. Ideally, that alert probably should have been set where the orange line is. However, we could come in and just say, if it clears above, again, today's high, well, we're a little late, but it still could have some meat behind it.
Yeah, so the question is, do we want to try to play a pullback to 30.50, maybe it gets a wide range bar in the open and there's a fill, or do we just want to go buy the high of the day today?
This one is definitely in no man's land, that's for sure. Let's take a look at our metrics. Short float's 41%, so there may be some more upside to that one. If that short float was not 41%, we were just playing the basic patterns as they were, we may look for more of a pullback or more
Might
of a...
be good for a bracket on this one, Steve. We could set the high one for here, and we'll go like this. How about this? Because, we can see the little base camp here, so feel pretty comfortable, right? So whether we get it here or whether it pulls back to, we want to use the high of this candle as a pullback fill, 30.50.
Yeah, I think so.
All right, so if it falls to 30.50, we want to get long.
And while he's doing that, of course, I do see your comments. A lot of people asking for the collaboration cloud link for the trend change lubricant. I just gave you a copy of mine, which is the same Jamie's using after he added that short float percentage. So you can look in the chat window and you can grab that cloud link, that code right there, and that will bring up the that'll bring up the trend change lubricant for you.
It rises to on this one. We want to go long on that one. Okay. So now we've set up a couple. What? Now is this one moving up after pre-market? After the day? Yeah, look, this one's trading up at 33 now, Steve. So this guy's moved. He's trading higher in the pre-market as well.
No, we can't even set some decent alerts here. What's going on?
Well, you can set them, but they're just going to auto-trigger. Yeah, I don't. That's some weird action to have 2 of those in a row like that. Well, then all we can do is have the PB fill here and see what happens on the open tomorrow.
There you go. All right, let's just do that.
All right.
Hey, real quick, just you got a guy, Ken's asking about, he's trying to work his layout on two different computers, and I wanted to show him the save layout on the cloud feature. Can you just show him that real quick?
Right. So if you're pulling up the same cloud layout, it should be identical whether it's your home or your office. So to save a whole layout, what we do is we just come up here to File and Save or Share to Cloud. Now, once this panel pops up, to save the entire layout, which is your whole assortment of windows, we have to first click this button, and you'll notice that all the windows in your layout get checked. This also gets checked. So then what we do is we just name our layout, okay? Jamie 3. As soon as we hit save, boom, that's going to be in the cloud waiting for us. So if you go load from cloud now, there's the Jamie 3 layout. So whether you open this at home, at the office, on the beach, the exact same layout should pop up every time.
And notice the file type column there, it says layout, so it's not just a window.
Right, because we have the ability to right-click in any window and save that individual window to the cloud, or click this button to save the entire layout.
All right, so hopefully that helps, Ken. All right, I guess we're going to look for some more. What's next?
All right, so let's keep on powering through here. Now, lumber liquidators, everybody's probably pretty familiar with that, the people that are making the bad wood.
That's probably why it's got a high short float percentage.
But looking at this pattern here, Steve, nothing really jumps off the page to me.
That's just been a long, long goodbye, is what that chart has been.
Yeah, the long kiss goodbye.
Yeah, no.
Okay, here we are looking at Bofi.
No, it's just a no man's land. Nothing really interesting to me
stands
there.
out there. And of course, ladies and gentlemen, we're trying to show you this in real time because a lot of the times Steve and I would just show up with 10 alerts to distribute. But by showing you this process, it's not just like we're going through there and going, oh, that looks good, that looks good. We usually have to dig through 5, maybe 10 before we find the right one, right? So now you're getting a peek into that. Now this NSR right here looks kind of interesting. What do you think, Steve?
I do think there is a bit of a void there. It may want to gravitate. I had one trader I used to know. He was a great guy, and he used to call that the vacuum. The vacuum cleaner would turn on. Once it got above that level, the price action would get sucked up into that void. So I do like that one, and I think that's a legitimate spot.
We'll just say 24.14. Hopefully this will not auto trigger.
Yeah, like all of rest.
Rises. Go long. Trend change lubricant setup. Daily. And of course, ladies and gentlemen, we always put these notes in here. Steve likes to say, this is when we're nice and sane. And so when the event triggers, you're just like, okay, I know what I'm supposed to do. There's no anticipation. There's no feeling of jitteriness as you push the buy button. It's just a methodical process. You buy it, you put in your stop loss, you go on to the next one. All right, so luckily,
that one stuck. Amazing.
That one stuck. There's no aftermarket activity. Yay. Actually, there's a little bit, but not past our point. Okay, moving right along. Now this one would have been
this one for a while.
This one would have been so sweet, ladies and gentlemen, because here's what we're talking about. When you spot them like this, and you're able to get in, here, and then you're already in it with low risk, boom. Now, is this one done, Steve, or is there still meat on the bone?
Well, I like the way it's been moving sideways. You can look at those last 4 days, and especially Friday, the sell-off, nope, psych, just kidding, going to pop back up to highs. I think it's ready for another move. Price can consolidate over time, or price. It can pull back in price, or it can move sideways and consolidate. And those are generally the ones I prefer to enjoy more because they haven't given back much price. They've just mellowed out a little bit and let the troops get a warm shower and maybe get a couple meals and get ready for the next big venture.
And this one also stuck. Very good. Okay. This little guy already busted out of his little prison right here. Of course, it was a long run up. This looks very similar to the way that other pattern that we were just looking at could work out, right? But
Let me just interject there. For those of you that recall my sermon on Pandora and the reason that trade was selected and how it dovetails with the pattern that I call the horseshoe pattern, where you get a gap up and a failure to complete the closing of the gap, only to turn around and move back higher. Those are some really nice slingshot moves, and those are fractal, meaning they can work on a 5-minute chart, 15-minute chart, or even a daily chart. And that's what the candles were telling us here. Had a nice gap up, but the sellers could not bring it all the way home, and the sellers started to lose control and then going back to highs. I love that pattern. That is the kind of pattern that you guys should imprint on. Was the reason that we chose Pandora for the trade of the week, and that thing put up 15% over about 10 days. That was a great trade of the week. So
Yes,
that's
it
what
was.
I can hear. So there could be some follow through. Honestly, I would have liked to have rather seen that back there where Jamie's orange line was. So I'm not quite sure. You know, the theory thinking is, yeah, you could have some residual follow through. You know, it could be worth just maybe putting one above today's candle and seeing what happens. But I'm
Yeah,
just
it's
not
just
feeling that one as well as the others.
it's just going to run into resistance up here
That
again.
too.
Like I said, missed money is much better than lost money, and that's part of the process here. We see what we want the charts to do. Now we have to find them early, but it's good to have examples of ones that have already went, right, for emphasis. So we've got plenty to pick from here. So we're going to try to get you guys at least a couple more here before we turn it over to Scott. So I'm just going to zip through these, Steve, and let's just kind of try to do a.
Let's find something that's just too compelling. I mean, that's
It's
okay,
like a
but I
flash
want to.
round on Jeopardy. It's Final
Yeah,
Jeopardy. All right.
no, no, too far, too fast. The other, uh,
Eh,
no, it's. I
it
mean,
might be interesting later on when it
yeah, it's
gets
nothing
back up here,
compelling.
but
It's nothing. Yeah, nothing compelling to me at the moment. I'm
a
sorry.
little premature, Kona. You know, once it gets past here,
I think it's still got work to do.
yep. Okay, UI. Ooh, now
Whoa,
this.
okay, now we're talking.
Yeah.
That nice move off those lows and then sideways, like I was just explaining, sideways for 4 days. That shows you that they did not get much price pullback at
This
all.
looks just like the LinkedIn chart did, Steve.
Oh, I love
Remember
that one.
LinkedIn? Had
Let's
the
mark
big
that
bar
one up.
over here,
hmm
right? So I'd say this one's definitely got my attention. So with the high for today.
And let's say if it does get through, you know, the immediate price target is that first red candle there on the S where the gap down occurred. That would be your first line of resistance. And then your second line target profit would be the beginning of the gap. But this is probably the nicest one I've seen so far. Love the way it moved up and then just kind of sitting there like you're holding a bird in your palm of your hand, trying not to hurt it. Matter of fact, if I were to guess, let me just look at this on my other one because I want to see where those moving average. Yeah, it's resting very nicely
Right
above the key
above,
moving averages.
yeah. Uh-huh.
And
Okay.
not to tease anybody, but they're coming. The next indicator to come on these charts are slated to be the moving averages, and trust me, myself, Barry, and Jamie will be applauding loudly when we get that. So hopefully sooner than later.
All right, so a beautiful one on UIS. Let's just see if we might be able to squeak one more in here. We've got AXDX right here, which, once it gets up to here, I don't know. It just
It's
nothing
expending
really
energy
jumps
trying to get
out.
there. Yeah, I'd rather see
Yeah.
something that's coiling and creating. That one's expending energy as well.
Uh-huh.
I want to see something that's coiling and creating some. No, there could be something to be said for that last one. Go back to the last one.
The ACAT.
ACAT, yeah. There's a really interesting level right there above. Maybe we should mark that level up above that 1750. Yeah. It's slowly working its way up there, and maybe it'll go sideways a little bit, and at some point, maybe next week, that thing might trigger, but I'd like to know. That's definitely a level of interest.
So we'll say 1765, or you want to go right at 50 right
I want to
here.
go right there. Yeah, I want to go to those first ones.
Yeah, we'll say 1751.
Okay, yeah.
Make it pop through at least by a penny. Okay, 1751. Rises long. Once again, the TCL daily. All right, now let's try to get one more in here, Steve. Yen. Okay. SGMO.
No, it's already
Too
blown
much over
through there.
here. Yeah. Oh, well.
That one could be interesting if you go to the top of that hump, exactly.
Mm-hmm.
There's kind of a rainbow level of resistance there. That could be interesting. And I like the way the price has consolidated a little bit here in the last week and a half. It's worth
All
watching.
right, so we want to say on this one, 874. That's a penny above, penny out of that range right there.
Yeah. And as I'm looking at, let's make this the last one, because as I'm looking down here, we're getting down to about 17% short the float. And again, a lot of these I like to have a big contingency of short float behind it to give it a little extra gas, a little extra stage rocket, if you will, if they're able to make it through.
Okay. All right, so we've got 6 in there for you. You know, once again, boot. It's got a little bit of potential there. Of course, you know, we don't have to marry these things. Obviously, if you do participate in a trade and you're happy with the P&L, boom. Other times, the chart will just be so pretty it might warrant an overnight hold. But of course, that's up for
I'm glad you just said that,
every
because
person.
somebody's asking me, well, are these day trading setups or swing trading? We don't know. We don't know. It could be a day trade setup if it goes up and punches through and you sell a little bit and then it rolls over and closes back near lows. That's a day trade. But if it's through and closes on highs with 3 times or 2 times relative volume, then it's probably going to become a swing trade. I mean, there's really no way of knowing until you get in it and see how it behaves. So hopefully that answers your question, Isaac.
Absolutely. Okay, I see we are actually over an hour. So, Scott, if you're hanging out there, I guess it's a good time for you to come in and talk about the ways that we can reward people for attending these webinars.
Yeah, thank you. Good presentation. Lots of good questions I saw there today. Go ahead and pull up that, the page with the pricing.
There we go.
And we're a software as a service company, and we've recently simplified our subscription model. So now we have TI Core and TI Premium. Actually, on the website, I believe I actually changed it to TI Pro, so I need to update this slide again. But this code, office hours, all caps, just like that, will take 15% off any of the totals right away. So we have TI Pro, which includes basically everything, including the one-on-one training, except for the stuff that falls under the AI/oddsmaker license permissions. And that comes with the TI Premium. So TI Premium is $188 a month or $1888 a year. And TI Core and TI Pro is $99 per month or $888 per year. When you sign up for either of these, you get a fantastic full hour with either Steve or Jamie of one-on-one training. It's a great way to kind of figure out how you want to do your layouts. They give you a little bit of insight into how to use the configuration editor, how to use Holly, how to use the back testers, how to use price alerts. And what you want to do is, as soon as you purchase, you want to go to our support section, click on training, and there's a handy little widget in there with a calendar, and you can pick your preferred time and date. So I want to thank everyone for coming. You can contact us, info@trade-ideas.com. There's some Twitter addresses to follow. You can follow Steve. He's Today Trader. You can follow QuantBot, which is Holly and or sometimes Jamie. You can follow Trade Ideas 1, which is Dan Merkin, our CEO. We sometimes post some unique stuff to Facebook.com. So go to facebook.com/tradeideiaspro for that. You can reach out to Steve directly with their email addresses you see there. If you also check the handouts panel in your GoToWebinar interface, you can download a PDF with these slides explaining the stuff again, just so you can take a look at that. Or just shoot us an email, and we'll be happy to help you out. There'll be a recording of this up if it converts correctly, either later tonight or tomorrow. Again, thanks everyone for joining us. If those of you on the Trade of the Week list should be receiving an email shortly with an invitation to the Trade of the Week webinar on Wednesday. There's also going to be a QA webinar earlier in the day on Wednesday. Keep an eye out for that. And we are also having another session similar to this called the Trading Room on Thursday at the same time as this. So it's at Thursday at 2 Pacific, 5 Eastern. Thanks, everyone. Thanks, Steve, Jamie, guys. Have a good
real quick,
one.
Jamie did drop in the cloud configuration there for the price alerts, the ones that we just set. So I did see a few quick requests on that, and I just wanted to give you guys about 5 or 6 more seconds before we shut it down, so you do have access to grab those cloud links that Jamie
grab that, because I'm going to be ending the webinar in just a few seconds for everyone. But again, thanks for attending. Thanks, Steve. Thanks, Jamie.
All right.
See you guys.
Thanks, everybody. Happy trading.
Yep. Cheers.
Bye-bye.